what we look for in the market as derivatives traders is a market, okay, which is shifting all the time. Okay, we are not married, okay, to one view of the market, which is that the market will go up all the time. We are open to the possibility of the market going sideways. We are open to the possibility of the market going up. We are open to the possibility of the market going down. And once, okay, we are alive and open to these kind of possibilities, what we do is we identify little points in the charts of what we know. It's not in me to understand everything, okay, which the market is wanting to do. It's not in me at all. I would not understand 100% of all that the market is doing. Nobody can understand the market 100% fully. But what I do is, like, I work with certain setups. Like, I have a setup, okay, which is called the failed option, which you all know about. And if the market confirms that setup, I work a trade alongside it. I also, okay, work on a setup, okay, which is called an IB30 candle, which is my 30-minute initiative buying candle, which was here, right? So the last IB30 candle, okay, came in about 2 days back, around here. So I have a certain process, okay, which I work with it. I do not understand the market fully, and I don't want to understand the market fully. But what I know is that once I have this kind of a setup in place, like this is what I call a special bar out of all the bars which are there. And I make a rule, okay, around this. And I say that the market is positive above this IB30 bar, right? In my way of looking at it, in my way of process, or in my way of looking at it, I would see, okay, that this market is positive about 23,070 and negative below it, okay, and I would activate this trade of about 23,180, provided, okay, I get some greens or demand. What is this bar? So what I'm going to do is I'm going to adopt a middle of the road approach, not really fully bearish, fully bullish, but more of a middle of the road approach, and specifically, okay, look at what we are anticipating in the market, okay, for those 15 days which are left in the month of February, right? We are focusing on the markets on a series by series basis. And if you've been following me on my Twitter handle, that is the approach I like to take. I believe that with every single series, there is a change of hands, there is a change of inventory. And because of the change of inventory, which involves a change of volume also, so there is a need for a change of bias. And we carry a bias, okay, from a start of a series to the end of the series. I'm definitely not going to talk to you about what is going to happen 1 year from now, because I do not know. But what we know is based on the volume which is coming into a series, until that volume, okay, stays till the end of the series, we can make a projection on where we expect the market to be. And we break that projection down from a monthly time scale to a daily time frame. And within that daily time frame also, okay, what we do is we break that from a monthly time frame to a weekly time frame, and from a weekly time frame, what we do is we break it down to a daily time frame. And within that daily time frame, okay, we like to look at that market between 30-minute periods and 3 or 5 or 15, depending on your comfort level, 1 minute time frame, 1 minute, 3 minutes, or whatever, okay, you choose. But what I want to draw upon over here is the equation between buyers and sellers, or demand and supply. And at every point in time, this equation keeps changing. And because it keeps changing, price moves. And price moves only when demand, price moves up only when demand is greater than supply. Price moves lower when supply is greater than demand. So once we understand this market as a basic math between buyers and sellers, between demand and supply, what we have to understand is how do we track this demand and supply line. And all my years, okay, I have been trading, I have been able to do that, okay, only by what I call an order flow chart.
Good evening, everyone. Good evening, guys. A quick sound check. I hope I'm coming across well. Welcome back to this Thursday 5 p.m. session, which is a continuation of what we started last week. We were discussing the menu, the revamped menu in the Weetrender chart section, and we discussed the first part of it. We discussed the order flow, we discussed the advanced market profile, we saw the smart candlesticks, and we had a look at how you can save global bookmarks. So that is what we did last week. So we will move on to the next very important panel of expert access. And before I do that, let us just do a quick review of what happened today and what is the reference we take forward for the new series of July, which is starting from tomorrow. So we have the market profile chart on the left and the order flow to the right. This is the June series chart, because till today we were trading of the June series volumes. So you can see how on the left side we had a 2-day balance in Nifty futures. We had this neutral extreme on 24th, which did not give a follow up. We got this initiative buying tail. So we left a VPOC on at 25094, and today again we got an open drive up, which moved away from this 2-day value. You can see how we got zeros at the lows in the order flow, but this open drive was on low volumes. You can see the first 15-minute volumes that were just 8,300 contracts, which is way below average. So for a good open drive, we need volumes which is at least 1.5 to 2 times of the average volumes. The average volume in Nifty futures is around 11,000. So we would have been happy if it was a 18,000 to 22,000 volumes in the first 15 minutes. So because this was a low volume drive, what we saw was in the initial balance, the DPOC shifted higher and there was profit booking. This 25452 is the weekly 2IB mark, which is an important reference for profit booking. So that is what we saw. We saw profit booking coming in, and then we got a dip below VWAP in the C and D periods. But the dip below VWAP, you can see, was not getting much of supply, and it stalled right at the 25292, which is previous day high. So what is the auction telling us? Auction is telling us that it does not want to enter the previous range. This previous profile was a nice balanced value area zone. So if we had got into this value, there was a very good chance of doing the 80% rule. But we stopped right at the previous day high, which was the first indication that the buyers who had come in at the morning are holding this level. And then we stalled for a bit, and later in the afternoon, once we got back above VWAP with this green bar, there was no looking back. We remained above this VWAP and the POC of 25435 and continued to probe higher. We left a extension handle in the I period, and that extension handle held in the J. And you can see how even we even got IB 15 signals into the close. So what we did in Nifty futures was form a normal variation day with a extension handle at the IBH. So this is how we need to see what the order flow is doing at important references. When the POC shifted higher in the initial balance, that was telling us that the low volume drive is booking profits. And the dip, when it stalled right at previous day high, it was telling us that the buyers are holding this. So there was a phase where we were forming a balance, and this was the phase where writers came in both then call and put. We'll come to that in a bit when we discuss the expert access section, and we'll see how we can watch that and take action based on what we see in those charts. So as long as it was in a balance, the writers were thriving. But once it gave a sign that it is moving to an imbalance, which was at this 12 p.m. bar, 12 noon bar, where we got above VWAP with these zeros and the POC was at the lows. So this is where change that equation. And since then, we will see even in those expert access chart how the NTM volume X and the spectrum started to tell us that things are getting bullish. And once we got above VWAP, you can see the chest of VWAP gave us an RB. So these are signals which is telling us that the buyers are in control, and that is why we can look for a range extension to the upside. And that is what happened, and we went on to close at highs. So that is as far as the Nifty futures is concerned. Let's now quickly move on to the Bank Nifty futures. What Bank Nifty did today at the open was form a low volume start, which looked like it is giving a drive away, but it was more of a fake move because so this is the opening volumes. Yes, we had zeros at the lows. It looked like it is going to give a drive on the upside, but you can see how the volumes are very low. 2200 contract, 2500 contracts are too low for the 15 minutes volumes in Bank Nifty. The average volumes is 5000. So you want a 15-minute bar of at least 8 to 10,000 contracts, which tells you that yes, initiative buyers are there. So this was more a local driven move higher, and you can see how the A period also was not able to uh, get exceeded. We have zeros on the buy side at the top, zeros on the sell side at the lows. So what happened was we had a low volume swipe in the B. C also went on to probe below VWAP, and then we made this range extension in the D. You can see in the market profile chart how we made an attempt to probe into this buying tail of yesterday. So what did we do there? In the order flow, it is very clearly showing us three rows of zeros on the sell side. So what is this telling? The sellers tried to make a range extension lower, and what is it showing us? Zeros on the sell side. This is very clearly showing us sellers failed below the IBL, the initial balance low. So when you get this, and we have always maintained, Shai keeps mentioning from failed moves come fast moves. So this is what we were waiting for. We were not getting any volumes in Bank Nifty futures before this, but this just below the IBL, which did not show supply, empowered the buyers. So you can see how immediately we got back above VWAP. We left this IB15, though this was on a very low volume. This was not considered very high quality IB, but nonetheless, this came after the sellers had failed. And more importantly, what happened? The POC shifted here, and the auction remained above this POC and VWAP. You can see zeros at the VWAP in the next bar. So when we made the range extension, the IBH was 56787, and when you made the range extension in this 12 p.m. bar, you can see how you have got big greens and zeros in the order flow. So this we need this kind of order flow confirmation when you are making a breakout. So this was very clearly telling us this is a very good range extension, and it not only gave us uh, the opportunity to go for the 2IB mark on upside. What it also did, it confirmed a failed auction at lows. So 56535 is the failed auction in Bank Nifty futures. 56535, which is the June futures. Similar level in the July is at 56725. So once you get a failed auction, you want to measure the objectives by 180R and 280R. So 57018 and 57502 were the respective 180R and 280R marks in the June futures. So what did we do? Immediately in this bar itself, we made a high of 57102. So the 180R was tagged, and you can see in order flow, you got this big greens at the range extension, which is what you want to see. You got zeros, and it immediately went on to make big highs. But then again we got a dip. What did the dip do? We also got an IS15 here, but you can see how the dip is stalling right at this POC of the IB bar. And more importantly, this IBH level, which was the reference now, was being held. Just like how we saw zeros below the IBL on the sell side, you are seeing zeros here in this dip. So this was very clean order flow nuance today we got in Bank Nifty. Hence, it was more bullish than what Nifty was today. And you can see how once the volumes came in, 8,300 contracts came in the 12 noon bar, which is the highest for the day. And in the dip, you did not get supply at this POC of that IB bar. So this is what the good quality IB bars do. They will give you support even after the IB has given a move away. So when this was holding, this was telling that the buyers are still holding this. And what we did, we went on to probe higher, leave another IB15, and went on to close around the highs. So this is what happened in Nifty futures and Bank Nifty futures today. So, and this was the end of the series. It was a neutral extreme close on the daily time frame in Bank Nifty futures, even in spot, and in Nifty it was a normal variation to the upside. So now, anyways, today the June series is closed, and we will no longer be trading this. So, what are the references we need to carry forward for the July series? So let's have a quick look at what the July series order flow looks like. You have the Nifty futures on the left and the Bank Nifty futures on the right. I am having the 30-minute order flow because we just need to identify the important reference, which is the rollover point for both of them. So what will be the rollover point for Nifty futures for the July series? The rollover point, you can see the last 45 minutes highest volume was around this 25610, where the day's POC also shifted into the close. So this is how we take off the rollover point. So 25610 would be a rollover point for the July series in Nifty futures, and we will have that reference marked from tomorrow open, and we'll see how the order flow gives us signals based on this level. Same thing in Bank Nifty, the highest volumes of the last 45 minutes, the POC was around this 57260 level. Same thing here also, the day's POC also shifted to the top. So this will be our rollover point for the July series. So 57260 and 25610 are the rollover points for the July series of Nifty futures and Bank Nifty futures respectively. So let's now move on to the continuation of what we had started last week. There's a question from Prashant asking rollover point, can we take the spot? We cannot take the spot for a rollover point simply because we don't have any volumes in spot. And to trade, we need volumes. Volumes are there only in futures and options. So that is the reason we look at the highest volumes which come in the closing 45 minutes in the futures of the new series to identify the rollover point, and that will form our initial bias, and we'll see what the order flow does at that reference for the rest of the series. For example, we had a session on Monday at 5 p.m. where I explained how the June rollover point had formed a base in both Nifty as well as Bank Nifty futures, because the Monday POC was right around the rollover point in both. Nifty, it was 24945, which was the POC in spot as well as in futures. And in Bank Nifty, 55900 was the rollover point, but 55923 and 55945 was the spot in the futures uh, POC of Monday. So it was very clearly telling us that the base is being built at the rollover point, and we can expect a move away from there into the expiry. So that is what happened. From 24945, we made a high of 25565 in spot today, and same thing in Bank Nifty. From 55945, we made a high of 57263. So you can see how the rollover point reference helped us in identifying that the market, both Nifty and Bank Nifty, are bullish going into the expiry. So coming back to what we started last week, let's now pull down the menu. We completed the Elite Access, Advanced Market Profile, Smart Candlestick, Global Bookmarks, and the order flow. Let us now move on to the Expert Access. So what do we have in the Expert Access? The first drop down in the Expert Access is the spectrum chart. So what does the spectrum chart give us? Spectrum chart gives us the range, expected range for the current expiry. So we have four indices in the spectrum charts, and we also have this NTM OI. So both of them has the spectrum chart, but the NTM OI has another addition to the spectrum chart, which is the open interest of the NTM calls and puts, which is a very important reference when you're looking at the overall market and what the inventory is doing. So I'll just quickly open up the Nifty spectrum chart, and we'll open up the NTMOI also to see what the difference is. So what does this tell us? This is the spot. The candlestick what you see is the spot, and by default it is a 3 minute, I'll just shift it to the by default it is the 1 minute. I'll just shift it to the 3 minute so that it is suggested you watch this in the default setting, which is the 1 minute bar, because that is where you will get to know as soon as the information is changing. 3 minutes you will get to know only at the end of 3 minutes what changes happened. So 1 minute you will immediately get to know what change is happening. So what do we see in this spectrum chart? So let me go to the start of the day. I'm just switching it back to the default setting. So start of the day, you can see my cursor is at the 9:15 mark, and you have the column at the top which tells us the CE wall, PE wall, and the gamma reference. So the PE wall was 25,200, which was the support. We closed at 25,244 yesterday. So 25,200 had become the base for Nifty spot. The gamma reference was also at 25,200, and the CE wall was at 25,500. So maximum CE writing as of yesterday's close was happening at 25,500, and the straddle of 25,200 looked as if was being written, and they were expecting that straddle to keep falling into the expiry. So this is what the spectrum chart gives us. It gives us the range, the upper range and the lower range, along with the gamma zero. The gamma zero is represented by this dotted line. So you can see what happened today. We started with that 25,200 to 25,500, which more or less remained constant and began to change around this 2 o'clock mark, where you see this gamma upper CE wall from 25,500 shifted to 25,600 first, and then the lower support also was shifting. The gamma zero also shifted to 25,500. So that was telling us that now the option inventory are being forced to cover at this 25,500 level, and that has become the support now. So that is what the spectrum chart shows us, where the spectrum, where the gamma zero is placed, where the call volumes are the highest, which is the supply point of the resistance mark, and where is the support, which is the put volumes. Along with this, we have the MVIS high and the MVIS low, which you can see. So MVIS high and the MVIS low are more or less the upper and lower range for spot at that point of time. So if the auction is above the MVIS high, we will consider it to be bullish. Below the MVIS low, we'll consider it to be bearish. If it remains between the MVIS low and MVIS high, that means it is a balanced market, and that kind of market will invite writers to come in. So this is one very important cue which you get by the spectrum charts. So another confirmation of this, we will just move on to the NTM-OI charts, which is nothing but the spectrum charts and the MVIS chart. But along with this, what it gives you is the near the money open interest of both calls and puts. So this pink line which you see is the put open interest, and the turquoise line which you see is the calls open interest. So why is this chart better than only the spectrum chart? Is because you have one more additional ammunition in this. You have the MVs, you have the spectrum. You can see where how the spectrum call and put walls are holding or changing. Apart from that, it is also telling you whether the puts are right, puts writing is more or the call writing is more. So you can see how today, right from the open, put OI was more than the call OI. So this was definitely re confirming the bias we had, which we saw in the market profile and the order flow, that we are bullish because we are holding above previous day's high. So when does this start to diverge? That is when it tells you that you have a trending move. So you can see both of them were almost parallel till late afternoon, but here around the 2 p.m. mark, where we saw a shift in the spectrum, you can see how the put started to go up and the call started to fall. And this was a divergence which was happening in the open interest of the put and calls. That means more puts were being written and more the calls were being covered. So this is telling us and confirming that there is more upside in the auction which is happening. So when you are getting confirmation in the order flow in the market profile and you see this in the inventory, you know you are more confident that you need to look for long side trades. So this is what the spectrum plus OI chart gives. Let us now quickly have a look at the Bank Nifty's NTM, OI and spectrum charts, because we can see what it did today. You can see how the Bank Nifty, I'll just close it up to the morning opening session, opening time period. You can see the put wall was at 56,000, gamma reference, gamma 0 was at 56,500, and the call open interest was highest as 57,000. So 56,000 to 57,000 was the spectrum range. 56,500 was the gamma 0 level. And you can see how at the open you had more call writing happening. The CEOI has gone up, but slowly the put also started to increase, and both of them were mismatched. And then again in the afternoon, you saw the call writing taking more dominance than the put writing. You can see this till 11:15. You are seeing a swipe higher in the call open interest. So what is it telling? And in Bank Nifty, we saw in the order flow, but that it was very low volumes, and in fact, we made a range extension lower. But the writers did not know what the order flow has shown us in the D period. D period is from 10:45 to 11:15, and in at the start of the D period, we had made a low which showed us no supply, and that range extension had failed. But these call writers did not know that, and they continued to write. So what happened to those call writers? Once the auction came back into the initial balance, came back above VWAP, these writers were forced to cover. You can see that in the spectrum chart. You can see how the CEOI was climbing, PE was stagnant, in fact, little bit on the downside. But once we got that move at 12 o'clock, the put OI started to rise and the call OIs began to fall. And you can see how the spectrum, which was at 57,000 for most part of the day, the OI started to fall here and the put started to go up. And then slowly after the 12 o'clock, you can see how it began to diverge. And then the gamma spectrum range also from 57,000, it shifted to 57,200, then to 57,500. So this is how this spectrum helps us. It helps us to first thing, it tells us the range. It then tells us what the open interest is doing in call and puts, NTM open interest. And then whenever there is a shift in this, it will also confirm whether the shift is being strong enough for the spectrum to change, the levels to change. So that is what we could see here. How both in Nifty and Bank Nifty, the put open interest, once it came back up and it remained up, it was bullish, and then it continued to go higher and the call open interest continued to fall lower. So this kind of divergence, when it shows the OI divergence, is telling you that the trend is in one direction. So because this was put on the up, put OI on the upside and call on the downside, it was a bullish. Vice versa will give you a bearish scenario. So this is how we use this spectrum charts and the NTM OI spectrum charts. Let's now move on to another very fascinating feature of NTM volume X. So what does this show? NTM volume X simply shows us the total NTM volumes of all options, calls and puts. So what do we look at this? We saw in spectrum NTM OI charts, we see the open interest of the call and put. This here we see the total volumes. So what do we want to see in this? We want to see which of the call or the put is diverging. From the open, you can see we started to get a divergence. The call volume started to pick up. So this was telling us the Nifty is slightly bullish. But then in the C and D period where we saw the dip in Nifty futures, you saw a change where the put volume X got above the call volume X. So this was a concerning development to remain bullish. But what did it do? It never diverged. It kind of started to make snakes. You can see multiple times it just overlapped each other. So this kind of what you see from this 10:45 till 11:45, this 1 hour was nothing but a balance, and we saw that in the order flow also. where we took support at a previous day high, but we were uh, below that POC which has shifted to the top, which was around 25410. So this was inviting writers to come in because it was telling us the auction is in a balance. But once we got back above VWAP, which we saw around the 12 p.m. order flow bar, you can see how clearly this CE volume mix is giving us a divergence right at the same time. So that is the reason we need to watch the 1 minute version of this chart, because you need to know immediately once the info is changing, because we are in very fast markets. You saw that happening yesterday also yesterday also, where we moved both ways very fast. Even today we got very quick dual way moves. Although the trend, the PLR, the structure was to the upside, it was not a easy way up. It was giving us very frequent and deep dips before going up. So that is the reason you need to be aware about the right time when the data is changing. So you can see how at 12 noon this C volume X began to divert. This is divergence, because not only this is C volume X is going higher, the PE volume X is dropping. So what is this telling us? This is telling us that the calls writers are being forced to cover. So this kind of divergence is what you want to look for to get into a trade. That means there is an imbalance which is started. How far that imbalance will continue, we do not know. But this point where the divergence starts is where you want to enter into a trade where you get a signal in the order flow, either in the call or the put or the futures. So the entry which you make at the first divergence point will be the best entry into the trend. So you don't know how long that trend will last, but what you can do is once you get a best entry, you will book half of your positions at the first target and then trail rest to the cost. So if the trend is continuing, that one risk free position will make you good amount of money. So that is what you can see here. Once the shift happened, the divergence happened, we did get a dip around 1 o'clock. But then again, the dip, the CE remained on the upside. We never crossed back again. But here again, you see a divergence. So this divergence, what you see at 12 o'clock, then what you see here at 12:55, then again what you see at 1:15. These are important TPOs also in market profile language. So when at the start of a TPO you're seeing a divergence happening, you can expect that TPO to be a bullish one. So if at 115, which is the start of the ITPO or the JTPO, uh, you are seeing this divergence, immediately you know you can have some bullish targets for that 30 minutes, and accordingly you set yourself up. So you saw this divergence happening again and again at 130, 145, before the J period started. You saw this biggest divergence of the day beginning to unfold. So when you get this continuous move higher, this you will not want to miss. This is very clearly telling us there is an imbalance on the call side, and what you have to do, you have to open up a call option chart of the calls, go to the 3 minutes and see where you are getting the best entry, the latest IB3 signal, jump into it. Or if you're getting a dip around the POC of a previous IB bar with a stop loss at low, get into it. So this tells us where you have an imbalance and where you have a balance, and where you need to hold on to straddles and where you need to come out of straddles. So this part where you were holding, even in fact even in the VMR we are holding the straddle short, but once we started this divergence to be seen, Shai immediately told us to come out of that straddle. So that is how you use this volumex chart, which is very important, along with what we are doing using the market profile, order flow, spectrum charts. This volumex will give you immediate signal of actionable trade. So whenever you are getting a divergence, you immediately jump into the trades. So let's have a quick look at the same NTM volume X of Bank Nifty also today, because we had expiry, we had good volumes in the Bank Nifty options also. So let's do a quick review. You can see how in Bank Nifty Nifty at the open, the call volume was slightly higher, but they were more or less parallel to each other. And same thing, what we saw in Nifty in that afternoon phase from 10:45 to 11:45, we saw multiple overlaps. So if multiple overlaps, it is only telling us that the market is in a balance. The buyers and sellers are trying to find a fair ground. When does one of them take over? When you get a divergence. So you can see how around the 12 p.m. mark, this call starts to diverge. The call volume X starts to diverge. And since then, rest of the day, this Bank Nifty volume X continued to diverge on the upside. Yes, put volume X was not dropping, but the divergence was there because the call volume X continued to go higher. So this is how you need to make use of these volume X. This is very, very crucial, very important if you are trading intraday, because it will give you very right moments when the action is happening. And as we always mention, this is one more tool in our uh, arsenal. So we need to combine the tools which we have to take trades. Only when most of the tools are in favor of the trade, we will have a high probability winner in our hands. So this is what the volume X chart is in options. Let us now move on to the next. We finished the spectrum. NTMOI we have already finished. Let's now move on to the gamma charts. So what is the gamma charts? We already saw in the spectrum, we have the gamma 0 in the spectrum range. So what does the gamma chart tells us? We also have the option of going to whichever time frame you want, and even whichever day you want. So if you start the day, you can see how it was placed. We had the maximum put open interest at 25,200, which we already saw. The call open interest highest was at 25,300. So this is at the start of the day. So this is showing you the strike wise gamma chart, what the put open interest and uh, call open interest are doing. As you move into the day, you can see how the put open interest from 25,200 is now shifted to 25,300. So these charts are visually telling us what inventory change is happening in the market, and as per the change of structure, is the option inventory also confirming the same. So here you know now 25,300 is the support. So if you are an option seller, you can look at going short in the 25,300 put. Yes, you will open up the order flow chart, see where the latest signal or what the latest reference is, and as per that you will get into short. But we are just telling you how you can. There are multiple ways you can use this. So as we go forward in the day, this 25,300 remains the highest open interest, put open interest point. Little further down at 11:45, you can see how the call open interest at 25,400 has begun to go up. So then you can see how 25,500 has maximum call open interest. So this was before we got that move of 1 o'clock. So once we get that move, you will see how this 25,500 call, that long bar, will start to come down. So this is that. So it has already started to come down. Just before the J period, it was around 30,000. Same, this is 31. This was the peak. And in the K, you can see it is the 2500 put is started to increase. So what do the writers do? Whenever one leg is starting to get into trouble, they write the other leg. So that is the reason you see a big climb up in the 2500 put. So what they do then again is they hold on to the put, they start covering the calls. So which is what happened, and that is how you can make use of this gamma chart, seeing how much of open interest is there at what period of time at each strike price. Same thing in Bank Nifty. At the open, you can see maximum put open interest was at 56,500, which we also saw at the gamma zero level, and maximum call open interest was at 57,000, which was the upper range of the spectrum, the CE wall. So as we move into the day, we got the move only at 12 o'clock. So you can see how post 12 o'clock, the puts, the 57,000 call was still holding, but later on in the day they were forced to come out, and you can see how 57,000 put got the highest open interest and call shifted to 57,200. So that is how you get very good visualization, and the gamma zero shifted to 57,200 into the close. So you can see how the earlier writers were forced to cover, and this we also saw in the other spectrum charts as well as volume X charts. So this is how we make use of this gamma chart. And one more last part of the expert access is the writer's cache, which also gives a similar kind of a view, but it gives you how much of option writing caches, unrealized caches there in the market. So here you can see at the start of the day, the CE writers unrealized cash at each strike price. And as you move forward, you can see how they keep changing the positions. The put started to get more activity. Here 25,400 call began to get fresh writing. This was the time in the C and D period where we are talking, where we had that multiple crossovers in the volume X and market was in a range. So that is what got many writers in. And then you can see how the put at the 25,300 began to go up, and then once that was taken out, you can see how the put remained taller and the call will continue start to fall. Here you have it as the highest 25,400, but into the afternoon you will see how the 25,400 call open interest will begin to decline, and that call open interest shifted to the 25,500 mark. So this is how you can see how this writer's cache is also placed, and into the close the gamma zero was at 25,500. So maximum writer's cache was deployed to the 25,500 call and put. So these charts you can see for any expiry. You have the expiry date here. You can because in the Nifty the next settlement would be on 3rd of July, so you can have the 3rd of July date and you can have a check on that as well. So you can do this on a daily basis of how the option inventory is placed, and if you are getting any signal in the order flow, how is it going to affect or how is it affecting the option inventory. So we have all the tools over here, and they are very simple, they are very easy to see and take action of. Only thing is you need to be aware about how to make use of them. You have very wonderful features in this expert access column. All of these spectrum or NTMOI. NTMOI I would prefer because it also has the option open interest which is there. The NTM open interest. Why do we select the NTM open interest? Because the volumes are highest in the near the money volume option strike prices. Far option strike prices are having low volumes and they will have the change also would be very slow. That is why we focus on the NTMOI, both in the spectrum as well as in the volume X also. So wherever the volumes are the highest, if you get a imbalance signal, the move also will come in the same place. So this is about the expert access column. We have finished the menu, the highlight and the expert. We have some more premium access tabs at the lower part. I'll just do a quick go through this, walk through to this. So what is the difference in this? This is the Nifty all options OI chart. So we were talking about NTM option OI. This is all the volumes. So NTM will any day be better than all volume because this all volumes will include everything, all near the money and out of the money options also. And then we have total volumes. So call volumes and put volumes for the entire 3 series. I think this is the whatever active series is going on, it is for that. So these are some other features which are available. You have the IV curve for people who use the IV curve for their option trades. You have the OI West chart. Here again, you can see see what was the highest point and where it closed. So this OI, and you can again, just like what we saw previously in the gamma chart, you can shift this and select any time, any point of time, and see how the OI was placed at that particular time, the OI base chart. And then you have this straddles chart, all the straddles in one chart. I'm just opening up the Nifty straddle. So what it tells us, it'll show us how a straddle is doing. So you can see you have the 25,500. So you have we have selected three pairs in this. So you have the open interest of the straddle, multi-strike. Oh, you can select the either the multi-strike straddle open interest, or you can select the price. So if you are selecting the price, you will get the price of the straddle in the chart, and you can see how these straddles are going lower and when they diverge. You also have the synthetic futures in this, and the multi-strike IV plus writer's cash. So for people who are using this, for option players who use IVs in their option strategies, these charts would be useful for them. And you have the historical uh, volatility chart of both Nifty as well as Bank Nifty. Again, for people who make use of this for their multiple leg option trades, which they carry over for multiple days, and they keep doing adjustments. And then we have the options table, which we have spoken time and again. Participant wise positions we covered last week, sorry, this week on Monday. So this is what the menu is in the revamped vTrender charts, and each section in itself is a very important tool. So we only need to know how to make most use of them, and how, when most of them are in sync with each other, you get some of the best trades which you can take. So that is it for today from my side, guys. If there are any questions regarding what we have covered today, I'll be happy to answer them before we wind up for the day. So we are starting a new series from tomorrow, the all important July series. Monthly wise, both Nifty and Bank Nifty futures have given us a neutral extreme close. So we will have to see how much this can give us a follow up at the start of a new series. And as and when we get into the new series, we will be sharing the relevant levels and information which we would need for going forward. So thank you guys for joining in. And in case you have any queries, you can mail us at support@vtrender.com, or you can DM me on X. Prashant, you can message me on X. I'll get back to your query on that. And we you any other query you have regarding any session, we'll be happy to answer your query. Happy to answer them. So thank you for joining in, guys, and let's have a great July series. And all the best. Have a great evening.